Fractional gold coins contain less than 1 troy ounce of gold. Most numismatists will tell you that large mints issue gold coins with a troy ounce or less of gold in them. One exception is the world-renowned sovereign coin, which weighs approximately 1/4 of an ounce. As a full sovereign, it is not referred to as fractional. When we think about it, it seems like a small amount of gold. Why should anyone invest in fractional gold, and what are the advantages and disadvantages? Why is fractional gold considered a hot investment? Our goal in this video is to discuss the pros and cons of buying fractional gold. What are the different types of fractional gold? Well, the majority of major precious metal mints produced fractional versions of their flagship 1 ounce gold coins. In addition to Krugerrands, Maple Leaf coins, Philharmonics, Eagles, and Nuggets, there are many other fractional coins that have become popular worldwide. In addition to the 1 ounce gold coin, there are usually versions in ½ ounce, 1/4 ounce, and 1/10 ounce weight as well. There are even some mints that produce fractional gold coins weighing 1/20 of an ounce. Usually mints volumes of fractional coins are far lower than the original 1 ounce version. Pros of investing in fractional gold. There are several reasons why fractional gold coins are worth considering. As gold's popularity with retail investors grow each year, so does the demand for smaller fractional coins. Mints have responded by producing more fractional coins varieties due to their many benefits. Number 1. Price. Obviously, one of the most important factors is gold's price. It goes without saying that larger and heavier coins are more expensive. In order to build your collection, you may not want to invest large sums of money if you are a numismatist or a hobbyist. You can build a stack of fractional gold coins without breaking the bank. The advantage of fractional coins is the ability to buy a little at a time, as opposed to saving up for a 1 ounce gold coin. For those who wish to regularly invest in gold, this can most certainly be appealing. Number 2. Building your own stack. It can be an absorbing experience to build your stack from scratch, so all the more reason to get more bang for your buck. By investing in fractional gold coins, you will be able to buy your bullion in smaller sizes and thus acquire more for the same price. Your stack will grow over the years if you keep at it, and you could end up with a formidable stack of gold fractional coins. Number 3. Hedging against the risk of economic uncertainty. In the event of a global economic crash, gold stackers seek to hedge their risk. Liquidity, however, is also important. The price of gold would rise rapidly in the event of a global economic meltdown, as it did in 2011. Investors can sell fractional coins to free up some capital at a time like this to make smaller purchases if they wanted to free up some capital. It's not always desirable to sell a large amount of gold because the stacker may not need to liquidate a large amount of gold when it's simply not needed. Number 4. Possible use as a bargaining tool. The value of major currencies around the world continued to decline. Post-COVID inflation spike has heightened the falling purchase power of many major currencies like the dollar, the pound, and the euro. Many economists predict that if economic conditions deteriorate further, fiat currencies may become worthless. The ability to barter and buy goods with small gold coins gives many stackers peace of mind in case of the unthinkable. The ownership of a large 10 ounce gold coins would make it difficult to exchange them for goods fairly. It would be possible for people to exchange their 1/10 ounce gold coins for a variety of goods or services on day-to-day basis if they own these coins. Number 5. Cashing in on the higher demand for gold. If the prices of gold rises, your fractional gold coins will also increase in value. Since fractional gold coins are usually cheaper to buy, investors looking to make quick returns from them the price of gold would buy these coins when gold prices were falling. Once the prices rise, they can sell these coins and get quick returns. Next up, we'll go into the disadvantages of investing or buying in fractional gold coins. Now, there are certain risks and costs associated with investing in fractional gold coins, even though they might seem like a smart idea for investors and stackers. Fractional gold is more susceptible to lose and wear. The risk of losing tiny coins is greater than losing that of losing 1-ounce gold coins. To prevent loss of fractional coins, we highly recommend keeping them in a bag, or perhaps what I really like are these tubes. Now this tube right here is specifically designed for 1/10 ounce gold coins. Just like this. Put the little seal on, and then bam, they're good and secure. So I would highly recommend getting a tube. Now, I purchased this tube on SD Bullion. It is a little bit expensive. I think it was around $10, but it's definitely worth the small investment to protect your 1/10 ounce gold coins. So I highly advise you do that. So, moving on, smaller coins also may wear faster due to their small size, so treat them with care to maintain their integrity. Now, the next disadvantage of fractional gold is that typically the price is going to be marked up more. Mints typically charge more when gold coins that contain less than 1 ounce of gold due to the large volume of gold coins they produce. A 1-ounce gold coin is usually the best price per gram. As a result, fractional gold coins always carry a higher markup price compared to other gold coins. Mints often charge markups of anywhere from 10 to 15% on fractional gold coins, since the markup cannot be recovered when trading in coins. Many investors find this undesirable. Lastly, I want to leave you with this brief message. Don't let the price of gold discourage you from stacking gold. Don't sweat it if you can't buy a full 1 ounce of gold. Perhaps for some gold stackers, it's not optimal for them to use all of their cash on a 1 ounce gold coin or bar. In my opinion, diversification into gold and silver is a must. For example, I like buying 1/10 ounce gold pieces and having enough cash left over so that I can stack silver as well. Remember this, gold is gold whether it's an ounce of gold, a 1/4 ounce of gold, or a 1/10 of an ounce of gold. Now, I'm not a financial advisor, therefore I'm not allowed to give you financial advice. However, my thoughts and opinions are that it is far better to be in fractional gold than some dying fiat currency like this, the US dollar. And I would much rather be in an asset like gold. This has been here for 5,000 years. It's never going to zero, and it's always going to hold its value. Anyways, I know I'm kind of ranting on, but in the end, I hope that you found this video to be informative, and that now that you have the knowledge of when it comes to stacking fractional gold. Thanks for tuning in, and I'll see you in the next video. Take care.